Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Go open up your Webull account today. Go get that free stock. Go get that free money. If you're new to investing and using the Webull brokerage app, send me a DM on Instagram. Let me know you've opened the Webull account. Let me know you funded the Webull account. And I'm gonna send you a free Webull tutorial video to walk you through how to use the Webull app so that you can get off to a fast start, making your trades, start building your wealth. The Fed has a decision to make on November 1st. And we're going to talk about how that will impact the American people. Now, it can hurt or it can help, but we're going to talk about it. This year, in 2023, what has the Fed done? They've raised interest rates. And the reason they continue to raise interest rates is because of inflation. Inflation has been pretty stubborn. Inflation has really caused a lot of turmoil for the American people due to the fact that interest rates have doubled. When interest rates double, that really does put a lot of financial pain on the American people. And the reason it puts a lot of financial pain on the American people is because we are a country who borrow money to live our lifestyles. But when money is too expensive to borrow, we can't borrow it. Therefore, our lifestyle suffers. But the Fed had no choice, right? Because there are a section of Americans who can't afford to buy the basic things they need to live because of prices being so high. So the Fed has to pick. You know, do we not raise interest rates and inflation get to 20%? and that's not going to be good. Or do we raise interest rates to bring inflation down so that, you know, people can afford the basic things they need to live? That's the choice, right? And the choice for the Fed is we're going to raise interest rates so we can bring down prices of goods and services. That's what they chose to do. And that's what they're going to continue to do. Now, November 1st is important because the Fed will be having their Fed meeting, specifically October 31st and November 1st, next week. Those dates are critical. And I keep telling you guys, you have to know what's going on when it comes to our economy. And those dates are important because in that meeting, the Fed has another decision to make. Do they raise short-term interest rates by another 25 basis points or not? That's a decision they got to make. Widely speculated that they won't. They won't raise interest rates. But guys, the Fed has done things against what popular belief is over the last 20 months, right? And I believe that they won't raise interest rates. I think they're getting some pressure to start backing off interest rates, but they can't completely back off because inflation is still above 2%. What I think they're gonna do on November 1st is they're not gonna raise interest rates. But what they're gonna, the Fed chair is gonna say is that in their December meeting and future meetings, they could. I don't think they will on November 1st. That's my opinion. Does that help or hurt the American people? Well, I think it helps. I think it helps. I think anytime you raise interest rates, especially in the situation we're in now where the short-term interest rates are already 5.5%, anytime you raise it above that, I think you hurt the American people. I think you do. Because again, short-term interest rates affect long-term interest rates. And long-term interest rates, like the 30-year fixed rate mortgage rate, indirectly are affected by the short-term interest rates. So if you raise short-term interest rates, I believe effectively you raise long-term interest rates, which again, we already have mortgage rates hovering around 7.5%, 8%. So that's not gonna help the American people. That's gonna hurt them, especially folks who are trying to buy a home. Short-term interest rates also affect auto loan rates. And you already know with auto loan rates for new automobiles, the average rate for people with good credit is about 5% to 7%. For people with bad credit, your average rate is 14 to 21%. So when you raise short-term interest rates, AKA the Fed funds rate, those auto loan rates are gonna go up as well. Guess what else goes up? Credit card interest rate goes up because it's tied to short-term interest rates. So in my opinion, if the Fed raises interest rates on November 1st, next week, Wednesday, it hurts the American people. Guess who it doesn't hurt? It doesn't hurt the upper 20% of the wealthiest people in this country. It don't hurt them. Because most of these folks have assets that generate income. And a lot of them don't have to borrow. They just go out and buy the things that they want to buy because they have the wealth. So this interest rate hike, if it happens on Wednesday, November 1st, won't hurt the upper 20% of the wealthiest people. But it will hurt your normal middle class earners, lower middle class earners, and then low income earners. Those are the people that will be affected by it. Why? Because they got to borrow money in order to live. Either they're going to borrow it on their credit card. If they got to go buy a car, they got to get a loan for it in most cases because they don't have any savings, right? And if you're in the market to buy a house, guess what? Hey, you're going to pay 7.5%, 8% for a 30-year fixed rate mortgage, which is insane. So raising interest rates, I get why they would do it. They're trying to fight inflation. But I think right now where we're at, you got to pause. You got to pause. You got to stop hiking. I just don't think they need to hike anymore, honestly. That's my opinion. I think 5.5% Fed funds rate is high enough. I don't think they should be hiking anymore. But again, that ain't my decision. That's the Fed's decision. And of course, that decision is going to be influenced by the 1%, in my opinion. That's just my opinion. It will be influenced by the 1%. Because the 1% controls what? They control the financial system in this country, and that includes the Fed. That's my opinion. They control the Federal Reserve to some extent, right? Even though the Federal Reserve technically is not part of the U.S. government, I still think it is because why? It's over, the Congress kind of oversees the Federal Reserve. And Congress is the U.S. government, right? Yeah. So the Fed is just not out there as a standalone body that just do whatever they want to do. They still have oversight by Congress, right? Congress still provides oversight. So in my opinion, U.S. government still controls the Fed. A lot of people disagree with that, but that's my opinion. You have the ability to create your own opinion. The reason I'm telling you this is you need to be prepared and knowing what's going on in our economy if you're going to build wealth. You got to know when the Fed is meeting and why they're meeting. So my recommendation is pay attention next week. Pay attention to what's going on, especially on Tuesday and Wednesday, right? If you're saying you want to build wealth, guys, you got to know what's going on, what decisions are being made and what that means, right? So pay attention to that Fed meeting. I'm not saying you got to sit around and watch the whole thing. What I'm saying is you got to pay attention to what's going on and understand what is happening. You also, in the beginning of November, you got a couple other things that are going to be happening that you need to be paying attention to. One is the jobs report. It's going to be coming out, and it may come out on Friday of next week. Don't. That's not etched in stone, but it may come out Friday of next week. The jobs report. So that's going to tell us what's happening in the labor market. It's going to also tell us if the economy is adding new jobs, right? We'll find out in that labor report meeting. That labor report on next Friday. Also, the following week, I believe the October CPI report will be coming out. The October CPI inflation report. That's another big report that's critical. It'll tell us what's happening with inflation. Either it's going up or it's coming down. We'll know. And then I think that data will affect the Fed's December meeting, which is in the middle of December. And that'll be their last meeting for 2023. All of these things, guys, we should have some knowledge of, right? If we're serious about building wealth, we're serious about getting to our financial freedom, you got to know what's happening with the Fed, with interest rates, with inflation, right? You got to know what's happening with the economy. And again, you ain't got to be an expert. You just got to understand what's going on. That's all. You just got to pay attention and understand what's going on, because I believe it's going to help you make the right moves when it comes to investing and building your wealth. Far as I'm concerned, I'm going to go ahead and do what I always have been doing, no matter what the Fed does, right? No matter what they do, I'm going to stay the course, and I'm going to continue investing and doing the things that I need to do in order to continue to get into my financial freedom. That's just the way it works for me. I'm not going to allow that to stop me either way, But what it will do is give me some important data that I can then use to make the right moves when I'm investing my money. Because here's the deal. If the Fed pauses and don't increase the short-term interest rate on November 1, then I think the stock market, it just doesn't do much. We already know over the last week or so, the stock market has been in the red, right? But we got a lot of stuff going on out here in this world. We got conflicts, war conflicts that are going on that the United States is right in the middle of. And whether you believe that's right or wrong, that's your decision, right? But we're in the middle of them, right? We are in the middle of a couple of war conflicts, and they're escalating, right? Even in the United States, you can see people picking sides, and you can see it on college campuses. You can see it in other places. People are picking sides. That's what we do, right? We pick sides. And hey, whatever side you're on in these war conflicts is your business. I ain't got nothing to do with that. Understand me? My only objective here is to do what? Get to my financial freedom. That's my objective. I'm not going to comment on these war conflicts or what's going on and pick sides. Hey, America can do what America wants to do, but for me, I'm going to focus on building my wealth. And I would advise you guys to focus on building your wealth as well. Because you got to understand, some of these conflicts that are going on in the world, guys, they've been going on for hundreds of years. And they're never going to be solved. They're just not, right? They're never going to be solved. Now, we can pick sides because we can say, well, that's our ally. That's who we want to stand behind, and here's why we're doing it. That's okay. I ain't got no problem with that. But you got to understand these conflicts have been going on for hundreds and hundreds of years, man. And we're not going to resolve them. Now, we can aid, but we're not going to resolve them. So I'm not going to worry about that. What I can only worry about right now is, what do I need to do financially to put myself in a position to build wealth? I can't be distracted. Of course, my prayers go out to the people affected by that, but I can't be distracted by that. I got to focus on what I got to do in order to build wealth. And I'm going to ask you guys to consider that strategy, right? Don't get sidetracked, because if you get sidetracked, you're going to miss important information that'll be happening next week and the rest of 2023. That could be the difference in whether you're building wealth or not. You say you want to get to your financial freedom, then here's where the rubber meets the road. For the rest of 2023, you need to be paying attention. You can't just bury your head in the sand, guys. We got to be paying attention, right? Especially when that jobs report comes out, right? I believe, like I said, I believe it's on Friday of next week. That's going to tell us what's going on with jobs. That's important. You need to know that. It will help you towards investing. Like I said, when that October CPI inflation report comes out, you need to be paying attention to what inflation is doing. Inflation affects the stock market. Inflation affects the real estate market. Inflation will affect whether you can start a business or not. So inflation affects these assets. When you got high inflation, typically assets come down in value. Now, that's not a bad thing, because of course, if you know anything about building wealth, the goal is to buy assets when they're discounted. See, that's why I'm telling you to be paying attention. A lot of us have seen what's happening in the stock market over the last week and a half, and we're panicking. Oh my goodness, the stock market is red. I'm losing all of my money. No, you're not. If you're building wealth long term, that's the time to buy. You want to buy assets when they're at a discount. And you want to hold those assets till they sell at a premium again. Right? So but if you don't know what's going on in the economy, if you don't know what's going on with the Fed, if you don't know what's going on with interest rates, if you don't know what's going on with inflation, you're missing most of the data that's going to help you invest. So we gotta pay attention to this stuff. And I know sometimes when I do these types of videos, they're not that popular because people are like, I don't want to listen to that. No, guys, you got to listen. These are the most important videos, right? These are the most important videos because it's going to help you understand what's going on in our financial markets. It's going to help you understand what's going on in our economy. Those are the things you need to have some level of working knowledge so that you can invest properly. Because a lot of y'all just want to listen to the radio and listen to TV and listen to these talking heads. All they want to tell you is the world's coming to an end. And I keep telling y'all, that's the 1% propaganda machine. Just look at the data, though. The data is going to tell you, right? We already know that the economy for the third quarter of 2023 grew at almost a 5% pace. It grew by 5% year over year. Or in the third quarter. Like I said, in the third quarter, it grew by 5%. A lot of people are saying, well, golly, the economy is growing at that fast of a pace. How could we be in trouble? Well, we are in trouble. Guys, we got interest rates for 30-year fixed rate mortgages hovering around 8%. That's trouble. That's not good. That is not good, guys. At all. We got auto loan rates that are skyrocketing. We do. So none of that is good. We need interest rates to come down. When interest rate starts coming down, stock market goes up. Rates come down, stock market goes up. Why is that? Because the stock market is made up of companies. And when companies can borrow money cheaply, they can take that money, they can invest it into their growth, and then guess what? Boom. When they invest it into their growth, they typically get a return on that growth. And when they get a return on that growth, and they become profitable, their stock price goes up. When their stock price goes up, the stock market goes up. The stock market is made up of nothing but companies in it. But if you don't have, as a company, if you don't have money you can borrow cheaply to invest in your growth, you don't grow. Right now, a lot of companies in the stock market aren't growing. That's because interest rates are high. They can't borrow money cheaply. They can't invest into their growth. So when interest rates are high, typically the stock market is going to be volatile like this. But if you don't know that, when you see the market red, you start panicking. Think the world coming to an end. No, it's not. That's what the stock market does when it's in a bear market. It's going to rally a couple days and then boom, it'll fall back down. That's volatility. That's because companies are trying to figure out ways to make money. They're trying to figure out ways to be more profitable. Because if they can be more profitable, then their stock price will go up. But their stock price ain't going to go up if they're not profitable. So you got to understand that. Long as you know that, you can say to yourself, well, shoot, if the stock market is temporarily down, but these are good, solid companies that I'm buying at some point in the future, I don't know if it's 2 years, 3 years, 5 years, these companies are going to go back to trading at a premium again. Why? Because interest rates are going to come down at some point. When they come down, then I know these companies are going to be able to borrow money again pretty cheaply. And when they can borrow money cheaply, they can invest it into their growth. And hopefully a lot of these companies continue to grow. And if they can grow, stock price goes up. So knowing that little stock market 101 information will help you towards your mentality to investing when you see red. Red, in my opinion, if it's blue chip companies, if it's blue chip ETFs, if it's blue chip index funds, red for me, guys, since I'm a long-term guy, means money. But in the future, it doesn't look like money in the short term because you put $1,000 into something and then next thing you know, you turn around next week and that $1,000 has went down to $800 and you're like, whoa, I'm going to zero. No, you're not. That's the way the stock market works when you got high interest rates, guys. But one thing I've learned over my 25 years of doing this is that it's temporary. Stock market always comes back and it thrives. It does. It has for 100 years. It has for 100 years. So have a long-term outlook, pick your 4 or 5 good investments, and then stick to them if you believe in them. That's what I do. Y'all know for me, it's S&P 500 VOO, and that's a Vanguard ETF, tracks the S&P 500 index. Y'all know I like Vanguard Information Technology, VGT, right? It tracks the tech sector, information technology companies. I love that one. I love the total stock market by Vanguard, which is VTI, right? Tracks the broader stock market. About 3,500 companies in that fund. I like that. I like being in the broader stock market. I like being in the broader tech sector because I believe that gives me the best opportunity to be in the very best companies in America. And I have a chance to grow my wealth by investing in these funds. And then I like a few individual stocks. Apple, Tesla, Nvidia, Microsoft, Meta, Alphabet, Amazon. That's my Magnificent 7 portfolio that I started Monday. And I'm going to continue to invest in those 7 big boy blue chip tech companies over the next 15 months. And I know a lot of y'all, well, they're all in the red. Yeah, I love them in the red. Stay in the red. I want them in the red because I can buy them cheap. If I can buy them cheaper, if I can buy Tesla under $200 a share, guys, come on, man. Come on, y'all know what Tesla, if you follow Tesla, you know what Tesla can do in the matter of months. Tesla can go from $100 a share all the way up to almost $300 a share within a matter of 4 or 5 months. That's what Tesla does. And guess what? That's where I make my wealth. So I'm waiting. I'm buying and just waiting. Because I understand when interest rates are high, these companies are going to be volatile. They're going to be volatile. And if I can get them at a discount now, when that volatility settles out and it's pulled out of the market, I'm going to make a bunch of money. But if you don't know that, if you don't know these cycles in the stock market, it's hard for you to see red and be okay with it. I see red and I look at that as an opportunity. I do, because I know over the course of the next 2, 3, 4, 5 years, if I can buy enough of these great companies in the red, at some point, they're going to start trading in the green again. And they're going to continue to go up, right? So you have to know, though, what's going on in the economy. You got to know what's going on with the Fed, right? You got to know what's going on with interest rates. You got to know what's going on with inflation to be able to put yourself in a position where you can say, well, okay, here's what's happening. Here's why the Fed didn't raise interest rates today, right? You got to understand that. Now, all of this, I'm telling you, because you got the 1% out there that's going to try to manipulate you. They're going to try to scare you because they don't want you buying right now. They want you on the sideline. They do not want you buying right now because they're buying. See, they don't want you muddying the water. They want you selling to continue to drive down the stock price, right? That's what they want you to do. They want you to sell now. Because if you sell now while things are going down, that's better for them. That makes the stock price even lower for them. And what they do is they come in and they start gobbling up all of these assets that you're selling, scared to death, selling at a discount, losing money on. They're picking them up. And then what they're going to do is, when things turn around and start going back up, right, then they're going to be pumping out propaganda that this is the time to buy, guys. Did you see what happened to Apple today? Did you see what happened to VOO today? It's skyrocketing. Get on the ship. Get on the rocket ship. Why? Because now they want to sell. See, they tricked you into selling when things were bad, right? They tricked you into selling so that they can buy them at a discount. And then what they do is they trick you into buying so they can sell all this stuff that they bought at a discount at a higher price. And that's how they make their money. So you got to be careful, guys. You got to understand these tactics that the 1% use. And I believe they use the Federal Reserve. The 1% control the Federal Reserve. I don't care what nobody say. I think they do. They do. Oh, no, the Federal Reserve is a detached body. No one controls them. That's crazy. Congress oversees the U.S., the Fed. The Federal Reserve is oversight, right? Watched over by the U.S. Congress. So you can't tell me the upper 20% of the wealthiest companies and the wealthiest people in this country don't have some impact on the Federal Reserve, because they do. They do. Indirectly, they do. And they're still part of that whole machine, right? That whole keep 1% rich, keep 99% poor. They're still part of that machine, guys. But that's okay. If we understand how the machine works, guess what? We can participate. And that's all I'm telling you in this video, is just understand how it works, right? Stock market in the red is not a bad thing if I'm trying to build wealth long term. It's not. Interest rates through the roof, you got to understand, okay, interest rates through the roof, it's not the right time for me to buy a car. It's not the right time for me to go out and buy a brand new car. That's all you got to do. Don't buy it. You ain't got to go out and get no 7, 8, 9, 10, 12% interest rate on a car. Don't buy it. Keep the car that you currently have. Take that money and invest it in assets while they're discounted. That's all you got to do. Hey, I want to buy a house. I can't buy one now. Interest rates are high. Don't buy one. They'll come down. At some point, interest rates will come down. I don't know when, but they will. They're going to come down at some point. It may take a couple of years, but they're going to come down. We already know the Fed has went on record. Now, they could reverse. They could pivot. They could pivot. But they went on record basically and said in June of 2024, that's when they plan to start reducing interest rates. So a lot of people are thinking, well, I'll wait till June of 2024 before I start investing, because once they start reducing interest rates, whoo, the market is going to go crazy. You got to understand, guys, they're not going to go from 5.5% interest rate all the way down to 2 in one little Fed meeting. That ain't how it works. If they do start reducing in June of 2024, it's going to be like 25 basis point increments, which is a nothing burger. You're still going to be at 5.25. They're not going to reduce them like a full 1% in one meeting. They're not going to do that. They're going to slowly reduce them if they start reducing them. Now, I know that's not a bad thing. I'm just telling you, it's not going to be this drastic. We're at 5.5%. Now we're at 2% in one Fed meeting. No, that's not how it works. They're not going to do that, because they ain't going to do them but drive back up inflation if they do that. Say over the course of the next couple of years, maybe by 2026, over a 2-year period, they'll reduce short-term interest rates. So it won't happen all in one swoop. It'll happen over a couple of year period where they just systematically reduce. The only thing that will accelerate their reduction is if the economy actually goes into a full-blown recession. Then that may make them reduce faster, because then they want to stimulate the economy. They know they can stimulate the economy if they reduce interest rates fast. Just like they can shut down the economy if they increase them fast. That's what happens over the last couple of years, and especially in 2022. They started 75 basis points clips, because what did they want to do? They wanted to slow down the economy. And the way you slow it down is you hit them interest rates. You increase them interest rates. You slow it down. Why? Back to companies again. Our economy, our stock market, our financial market is about companies, man. It's only about companies. And like I told y'all, the Federal Reserve controls the money supply through interest rates. When they want to add more money supply to our economy, guess what they do? They reduce interest rates. When they want to decrease the money supply to our economy, they increase interest rates. That's how they control the money supply. But you got to know that. Right now, with interest rates as high as they are, they have turned off the money supply. But they had to. And the reason they had to turn off the money supply is because back in 2020 and 21, guess what they did? They turned on the money supply. Right? Fed funds rate 0, basically. They put a lot of money into the economy through stimulus. Right? At some point, they have to take that money out of our economy. So in 2022 and in 2023, that's what they've been doing. They've been increasing interest rates to pull that money out of our economy, because they control the money supply through interest rates, guys. And that's why, hey, they're tightening up too. They call it quantitative tightening, where they don't buy bonds, right? They don't buy them back. So that forces, it's very complicated, guys. And I'm not going to get into that, because that's not my expertise. So I'm not going down that rabbit hole. All I'm telling you is be aware of what the hell is going on in our economy. It's going to help you be a better investor. If you're trying to build wealth, this is a great opportunity to buy assets, good assets, because they're on sale. Now, a lot of people argue real estate is not on sale, and I agree with you, it's not. Most real estate that you're going to look at is not on sale. Why? Because we don't have enough inventory for it to be competitive. And you got a lot of people who have homes. They are on the sideline and they won't sell their homes because they don't want to trade in their low fixed rates for some 7-8% rate just to get the equity out of the house. They don't want to do that. So they're sitting tight. So you don't have a lot of inventory. The inventory you do have on the market, sellers are being patient. It's a seller's market. So maybe it ain't the right time to buy real estate, but for me, I'm not buying real estate, but that's okay. I will be buying real estate through the Prime Real Estate Fund in 2024, though. At some point, you got to get back in the game. If you know what I know about real estate is always a good investment. I don't care good times or bad times. It's a good investment if you buy in the right location and if you can pay cash. And that's what the Prime Real Estate Fund is going to be doing. We're going to be paying cash. We're not going to have to go out and get an interest rate. So I don't care what interest rates are. All I care is, can I find prime real estate in great locations that people have a desire to live? Boom. And then we're going to buy. That's what the Prime Real Estate Fund is going to do. We're going to pool together investors from all around the country, all around the world, if I can. Now, I'm still in the regulatory phase right now, putting this thing together, so I may not be able to allow foreign investment. I may not be able to, so if I can, I can't. Then it'll be all around the United States. But we're going to be pooling together investors' money to buy real estate in the prime locations. That's the reason the fund is called the Prime Real Estate Fund. We're only going to buy real estate in prime locations. And we're going to do that in 2024. So that way, real estate is still a good play. But if you got to go out and borrow money to buy real estate right now, it's not a good play. Because you're going to pay a really, really high interest rate to get the money. And really, your biggest expense in most cases, when you're buying real estate and you have to finance that real estate, your biggest expense is the interest expense that you got to pay the bank to borrow the money, especially at 7.5%, 8%. That's going to eat up all your cash flow because you're going to still have your normal expenses that you got to go with it. So yeah, I can understand where a lot of people don't want to buy real estate if you got to go out and get a loan. But if you don't have to go out and get a loan, I think it's a great opportunity to buy real estate. You just got to find you a good location, right, that people have a desire to live, and you're in good shape. Because I keep telling y'all guys, everybody in this country is not broke. You got the upper 20% of the wealthiest people in this country still buying whatever they want to buy. You got 65, almost 70 million baby boomers who got money. These people got money. You got international buyers coming into the United States, buying up all the real estate, prime location real estate, man. You got juggernauts like BlackRock buying up residential real estate in prime locations, guys. So we sit back and real estate ain't a good play right now. Listen, man, maybe not for you, but there are plenty of people buying real estate out there. There are plenty of people buying real estate, man. Why? Because they don't have to pay. They don't have to get a loan. They got cash. If you got cash, it's an awesome opportunity to buy real estate. So that's my opinion. So you got to look at asset classes and think, okay, if I got cash, even though prices are high, even though it's deemed a seller's market, probably what's happening though is whoever has their property up for sale right now is probably staying on the market a little bit longer than they did in 2021. Why? Because demand is down, right? Demand is down. So now if I'm a cash guy, gal, I can go to that seller and say, hey, I'm paying cash, man. I know you got this thing at XYZ price, but I got cash. You've been on the market 60 days. What do you want to do? You going to take this reasonable offer that I'm giving you, or you going to stay on the market another 60 days? That's on you. I'm ready with cash. That's how you negotiate. And you may have to kiss 3 or 4 toads, right? You may have to kiss a few frogs. But at some point, you're going to find your prince or princess. And when you do, you pay cash and you move on. Now you got you a great property. That's how real estate works. But you got to have cash. If you got to go out and get a loan, it don't make sense, in my opinion, because the cash flow ain't going to make sense. The mortgage expense is going to eat up your cash flow. So understand that. So for me, the best play right now for just a normal person, in my opinion, is the stock market. That's your best play. Or starting a business, right? You want to start a business when nobody else wants to start a business. That's the key, in my opinion, guys. You want to start your business when nobody else wants to start a business. Why? Because you don't want competition when you start your business. You want to be the only one. And normally, when you're in bad times, people don't want to start businesses. So that's when I would start mine, right? That's another asset class you can put money into and multiply it down the road, right? So those are your three asset classes, in my opinion, if you know what's going on in the economy, if you know what's going on with interest rates, if you know what's going on with inflation, then you got an opportunity to build some wealth, man. Get yourself to a point where you can have some freedom. The whole point of all of this is to be free. I was looking at some of my comments on my live stream from yesterday, and one lady, she made a comment, you know something, it is so good to be free. It is so good to be financially free, and I can get up and do whatever I want to do. To me, that's the kind of comment I love seeing. I love seeing what people are saying, you know something, I'm at my freedom, man. I get you. I got it. I'm doing it. I'm at my freedom. That's the thing you want to get to, guys. You want to get the freedom. But you don't get the freedom by burying your head in the sand. You don't get the freedom by being afraid and scared. You don't get the freedom by taking your money and investing it in other people to make them wealthy. You don't get the freedom that way, man. You just get on, you stay on the hamster wheel, right? Don't bury your head in the sand. Figure out what's going on in this economy. And you want to start with the Fed meeting next week, Tuesday and Wednesday. And what I would recommend you do is after the Wednesday meeting, the Fed chair, Jerome Powell, he's going to speak to the country. And he'll probably do that about 2:30 p.m. Eastern time. If I were you, I'd watch those comments. And I would also listen to the questions that people in the audience, or I don't know if they're journalists, or I would imagine it's some type of financial journalist, they'll be asking him questions. Listen to what those questions are and what he says. It's going to tell you a lot what's coming, man. It's going to tell you a lot where their position is with inflation. But if you don't want to pay attention and listen to any of that, you're not going to learn, right? You're not going to have any basic level knowledge of what's happening with the economy if you never, I'd listen to the Fed chair. All these talking heads on TV, I wouldn't pay any attention to them. I just listened to at 2:30 on Wednesday, November 1, 2:30 Eastern time. When that Fed chair gets up there, Jerome Powell, and gives a little 30-minute talk, that's who I would listen to. All the rest of these guys, I wouldn't listen to them because it's all propaganda, right? It's all manipulated by the 1%. So listen to him. And then what you do is that following Friday, look at the labor report or the jobs report. See how many jobs did the economy add in October. And then compare it to how many jobs were added in September. Right? You want to know if there's still a increasing number of jobs being added every month, that means we still got a pretty strong labor market. Right? And with a strong labor market, at least from the Fed's perspective, it's harder for inflation to come down. When you got people out there who is not afraid to lose their jobs, they're getting wage increases, people still spend money. Even though they don't have it to spend, they spend it, which keeps inflation up. So the labor report or the jobs report is a critical piece of data. And then later on in the month, well, middle of the month, you want to look for the October CPI inflation report. That's going to tell us if inflation is coming down still or if it's going up. And then we want to compare it to what it did last month, right? And again, guys, all of this information is right there at your fingertips. You don't have to be an expert, right? If I look at the jobs report and the numbers go up month over month, year over year, that's probably not a good thing for inflation. Maybe a good thing for our economy, but it's not a good thing for inflation because we want inflation to come down. If we look at the CPI inflation report and the numbers go up, and that means inflation is going up. So that's not a good thing for the economy. So you just want to have a working knowledge of this stuff. You don't have to be an expert. You don't have to do any of that. You just need to have a working knowledge. That's all I have, guys. I just have a working knowledge of what's going on. That's it. Just a simple working knowledge, because it helps me when I'm investing. It gives me some type of clarity on why the stock market is doing what it's doing. I need that information in the filter system so that when it's in the red, I don't equate red to bad. I don't, but I know a lot of you do, because I get the emails and I get the DMs. People see red, they panic. Why? Because that's the way they're programmed. That's the way the 1% want you to think. They want you to see red and think, oh my goodness, I need to sell, I'm gonna lose my nest egg. That's what they want you to think. And again, if you're in the building stage of wealth, in my opinion, if you got the right investments, in my opinion, red is an opportunity, right? I want to buy as many blue chip companies as I can in the red. And then I gotta have the ability to be patient and hold them till they are in the green. But in the green, high enough in the green, right? So if I buy VU at $350 a share, I should have a goal for VU. I should have a goal. I should have a goal. I should have a target sell price. Okay, I'm buying VU today at $350. What's my exit strategy? Let's call it that. Let's call it an exit strategy. If I'm buying it at $350 today, and I know historically it's trading in the fours, sometimes in the mid fours, that's what history tells me. What is my exit strategy? I'm buying it at $350. Is my exit strategy to get out of it at $400 a share? Is my exit strategy to get out of that $425 a share? You got to have an exit strategy, right? If you're going to be investing in these paper assets. Matter of fact, you got to have an exit strategy if you're investing in any asset. But let's just use the stock market. So I buy VU at $350 a share. And I say to myself, okay, my exit strategy is $425. So I'm gonna continue the dollar cost average in, I'm gonna continue to buy VU, but when it gets to $425 a share, I exit. I sell my position and I move on. That could be one way to look at it, guys. That's a strategy. You know, my target buy price is $350 a share and under. That's my target buy price. My target sell price is if it gets to $425 or higher, I sell. I don't get greedy. I take my profits and I roll them into something else, and I keep moving. My second strategy can be I just stay in VU. Instead of saying $425, maybe I say, hey, I'm just gonna stay in VU for 2 years. And then in 2 years, I exit. You gotta come up with a strategy for you that works for you guys. My strategy is to just dollar cost average in, but I've been doing that for a long time. So I just look at, okay, I'm not gonna need this money for 10 years. Let me just keep dollar cost averaging in for these next 10 years. History tells me if I can do that, my cost per share is gonna be lower than if I just tried to time the market, right? That's what history tells me. So that's one of my strategies, but I also have that short-term strategy that I just mentioned. I have it with Tesla. I have it with the Magnificent Seven that I'm doing right now. These 7 big boy tech stocks. I call them the Magnificent Seven because that's what they're called. They're the top 7 companies in the S&P 500. The strategy I have with them is what? I want to double my money. I want to put so much money into them over the next 15 months, and I want to double that money. Now, if I double that money before it gets to the 15 months, I'm selling it. And I've already told you guys that. That's how it works for me on that portfolio. But that's a small part of my portfolio. The larger part of my portfolio is ETFs and index funds that just stay in the market through dollar cost averaging until I need the money down the road, right? I don't worry about the fluctuation in the price. I just keep buying. But in the Magnificent Seven, I do want to buy these as low as I can buy them. So as I started on Monday, hey, keep going lower. I want Tesla to go lower because I know at some point Tesla's going to bounce. And when it bounces, it's normally a pretty good bounce. When it goes on a run, when Tesla runs, it's normally a good run. So I don't worry about Tesla I want it to go to under $200 a share, honestly, because I know I'm gonna make a bunch of money if I can get it under $200 a share. And it was close this week. Didn't quite make it, but it was close. But I'll keep watching it and I'm gonna keep buying it. Same with the other 6 of the Magnificent 7. Keep buying them and let's see what happens. Red is opportunity. As long as you understand red is opportunity, guys, you're gonna be good. You're gonna be fine. Don't let the 1% scare you. Don't let them manipulate you. Continue to build your wealth. Get you a good plan together. Get a good plan together that you are comfortable with. And then just stick to that plan. Guys, you cannot get to financial freedom without buying assets. You can't. Why? Because you can't work for the rest of your life. At some point, you're going to have to give up working. And it'll be a shame if you give up working and you've not built any assets that can generate income. Because when you give up that active income, all you got is your passive income. You better have passive income coming from somewhere. Right? So you have to pay attention to this stuff. You have to pay attention to what the Fed is doing because they control the money supply. I keep telling y'all that. Whatever the Fed does, it's going to either turn on the money supply or it continues to turn off the money supply. Or, like I said, that's what it does, though. They control it. They control it through interest rates. And right now, interest rates are super high. So the money supply is turned off because they want to pull out that supply that they over-flooded the economy with 2 years ago. They're pulling it out. That's what they're doing. That's the reason inflation is so high, because they turned on the money printer and they pumped a bunch of free money into our financial system that our supply versus demand upset the equilibrium. See, when you pump a lot of money into when you pump a lot of money into our economy and our supply versus demand is disrupted, what happens is the more money you pump in, that means the more money people have. And y'all know what we do when we get money in the United States. We spend it. And when those people started spending all that money, our supply of our goods and services couldn't keep up with it. So when you have an over demand, under supply, what happens? Prices go up. And that's where inflation comes from, guys. That's it in a nutshell. That's it. That's what happened. Now, the Fed says, okay, yeah, we had to do what we had to do to fight the pandemic, but now we want inflation to come down. How do you bring inflation down? You pull that excess money out of the economy. So when you pull enough money out of the economy, guess what happens? People stop spending. And when they stop spending, guess what happens? Prices come down. Why? Because now you got less demand and you got more supply. Anytime you got more supply, less demand, prices come down. That's what you see happening right now. That's why prices are coming down. Right? That's why inflation has come from 9.1% in June of 2022 down to, and this is headline, I believe down to 3.7. Why? Because the Fed did what? They increased interest rates, which do what? Turn off the money supply. That's it in a nutshell, guys. So all this old fancy talk people be telling you, listen, man, that's it in a nutshell, down and dirty, the old simple way. If you remember that, when interest rates are up, all the Fed is doing is turning off the money supply. When interest rates come down, way down, what are they trying to do? They're trying to stimulate something. They're trying to stimulate the economy. And the way they do that is by doing what? Turning on the money supply. What is the money supply? Borrowing money. Borrowing money. Right? That's a big part of our money supply. People's ability to borrow money cheaply. Fed controls that. And that's all they're doing. And anytime interest rates are high, the stock market doesn't perform well over time. It doesn't. Why? Because the stock market is made up of companies. And if companies can't borrow money cheaply, they can't grow. And if they don't grow, their stock price doesn't increase. And if their stock price doesn't increase, guess what? Stock market don't increase. The Dow don't increase. The NASDAQ don't increase. The S&P 500 don't increase. The broader stock market doesn't increase, right? So you got to know these fundamental things about our financial system, right? Just fundamental stuff. Okay, I see stocks are red today. Now, these are great companies. I know they were trading higher 3 weeks ago. I know they were trading higher a month ago. I know they were trading higher 6 months ago. Why are they down now? And is it an opportunity for me to make some wealth? I think it is. So that's how I'm building my wealth, is just by paying attention to what's going on, right? And that's what I did all of last week. I just paid attention to what was going on. And when there were opportunities that presented themselves, I jumped on it. And then now I just got to do what? I just got to hold those investments. I got to hold them. I got to hold them until they trade at a premium again. And I've done that for 25 years, guys. I'm a patient guy, especially when it comes to my building my wealth. I'm patient because I know it requires patience. I know it requires consistency. And I know it requires discipline, but you guys can do this. What's your other alternative? Work for somebody for the rest of your life? Be broke? I don't know. That's your only other option. You either build wealth or you don't. There ain't no in between. Either I'm gonna build wealth and get to freedom, or I'm not gonna build wealth, not get to freedom, and I'm gonna work for somebody for the rest of my life. Those are your choices. You choose. Personally, for me, I choose freedom. And I hope you choose freedom. Getting to freedom does require a level of discipline, guys. It requires a level of consistency, and it requires a level of patience. If you don't got those three things, figure out how to get them. Go back and look at some of my videos on YouTube to get you a blueprint. But you got to reprogram yourself. You know, I still get comments and I still get DMs and I still get emails of, hey, I got $1,000. How do I double it? How do I double it in 3 months? How do I double it? Guys, I don't know how you double it. I mean, I don't know how you double it in 3 months. But if you got $1,000 and you're willing to put it into an investment and you're willing to do that for over a year, 2 years, 3 years, 5 years, I can give you a blueprint that I use that makes sense, that can multiply your money. But this stuff about, hey, I got 10 grand, I need to get $300 a month income from it. How do I do that? Guys, I can't tell you that. That's not what I do. You got to go find some other joke on YouTube for that one, or TikTok, or Instagram. They'll show you how to do it. Send me $1,500, I'll show you. And then poof, you never hear from them again. They block you. And now oh golly, I got beat out of it. Why? Because you're trying to get shortcuts. Stop trying to get shortcuts. And just do the thing the right way. Be patient. Be disciplined. Be consistent. And you reduce the chance of people taking advantage of you. But anytime we run around here trying to find shortcuts, we typically open ourselves up to be taken advantage of. Why? Because we're looking for a shortcut. We don't want to play the long game. We want the short game. We don't want to play long game ball. We want short game ball. But you open yourself up to get taken advantage of. I was looking at this thing on YouTube yesterday about these guys, popular radio guy, podcast guy, and this other cat who supposed to have been a real estate expert. This joker to milk people out of, I don't know, 17, 18, 19, $20 million on a little shell game. He got 3 or 4 properties in New Jersey. He done got this popular, allegedly, he done got this popular radio host, allegedly, all this is alleged now, who got big old Instagram following, big old following, right? See, that's what these guys do. They go find one of these guys who got a big following, right? Who are very popular and people look up to and people will listen to. These guys are, these old scammer guys, they'll go latch on to one of those guys. And then they'll tell these guys, look, man, hey, this is what I'm doing. Now, you promote it for me, and I'm going to go ahead and pay you X amount of dollars. You're going to get rich too. And guess what? The influencer They start promoting this crap. Now, they don't know nothing about real estate. Ain't never built a real estate portfolio. Don't know nothing about real estate 101. But yet and still, they attach their name to these scammer guys. And then what happens is they start doing these seminars and talking about it and charging people money, and people start coming in. This guy allegedly done stole like 20 million bucks from people. And this popular radio guy, he was in, you know, he, in my opinion, if you promoted this guy, you vouched for him. I mean, if you promote somebody, you vouch for them. That's the way I look at it. If I get on here and tell y'all, hey man, XYZ, and I take money to promote that, if I tell people, get this guy your money, he gon' turn that money for you. He gon' make you profitable. He gonna give you a big return. Guess what people are gonna typically do if they follow me and I'm this big personality? They're typically gonna trust you. They ain't trusting him. They trusting you. They don't even really know him. This guy just showed up out of nowhere. They trusting you. And that's what's happening though, see? So you guys gotta be careful of these social media personalities connecting with these people who you don't know. People who have questionable and spotty backgrounds. And again, that doesn't mean people can't change, but come on, man, you got a questionable background. You have been to prison. And the prison thing didn't really bother me because I got a lot of buddies of mine that done had run-ins with the law and done went to prison, but they done changed their life and they're doing the right thing now. So I'm not knocking people who went to prison, but the guy didn't have any real estate background. That's the part I don't understand. You swindle people out of 20-something million dollars. You got no real estate background. You got no background of buying real estate, rehabbing it, selling it for profit. You got no background there. But you go get this popular guy, this popular social media figure, this popular person to vouch for you. Now all of a sudden they done arrested the so-called real estate guy. They done arrested him, the Fed. And now they're looking at this popular radio personality or podcast, whatever this guy do, right? They're looking at him now. Now he getting ready to potentially get some charges levied against him. And now his whole world is done. Why? Chasing a few dollars. You had the respect of all of these people. One of the most popular podcasts, radio, whatever y'all call them, people out there. And what do? You trade all that in for some fast money. Allegedly. It's a shame, man. But that's why I keep telling y'all, man, you better be careful who you listen to out here on this social media platform. Listen, if someone's coming to me about investing in real estate, but they got no background in real estate, they can't show one shred of documentation that they were successful in real estate. I don't know, man. I don't know. I would definitely be on the lookout for that. Same thing with investing. You got these people out here on social media telling you, hey, send me this money. I'm going to teach you how to Forex trade. I'm going to teach you how to day trade. I'm going to teach you how to options trade. None of these people have no track record of doing any of that. They don't. But yet and still, we believe them. Why? Because they show us a Lambo. They show us a house. They show us some lifestyle. They show us them on a private jet. And we think that they legitimate. But we do no simple background. So I told y'all, if y'all don't believe anything I'm saying, go out and do a background check on me, man. Y'all got my name. Just stick it in there and you get you a background check. It ain't that expensive to do. And you'll know exactly who I am. All you got to do is do that for these people that come to you with all these old crazy ideas. Right? Do a background check on them. Invest a couple dollars and do a background check and figure out if these people are who they say they are. A lot of them aren't. That's how these people are gotten swindled with this radio personality guy. That's how they're getting swindled. I mean, one guy was on there and said he lost $1 million. And here's what the scheme was. Here's the scheme. The scheme is get the popular radio host guy to talk about it on all of his social media platforms. Have him put together seminars in different parts of the country, right? Miami, New York, right? Vegas. Let's get him where he's very popular at and got a big old following. He's the front guy. He'll get out there and blow the bullhorn. And then when we get these people to these seminars, guess what we'll do? Then we'll bring in the real estate expert. But guess what? He's not a real estate expert. He's just a guy that scam people. But you don't know that because you're believing your online personality. Your online personality, you believe your online personality has vetted this guy. But your online personality really hasn't vetted this guy. Your online personality is just in it for the dollars. Next thing you know, this guy, you send this guy 100 grand. You send him 200 grand. You send him 300 grand. And he don't even have you sign a real contract. What he has you sign is some bogus little contract. And then all of a sudden, he's saying, I'm gonna buy this property and flip it, and you're gonna make 30% return. Here's the problem though. You never did any due diligence on that property. You could have did a quick property search through the local county where that property was. You could have did a property search and figured out exactly who owned that property for free. It would have took you five minutes. And none of those people did. I won't say none of them did it, but the ones that got scammed didn't, because had they done that little bit of due diligence, it's public record, guys. If someone tells you, hey, I'm a real estate magnate, I got a 50 million in real estate, I got 100 million in real estate, well, send me the addresses. Send me the addresses and let me see if you got 100 million in real estate. Because guess what? All I need is the address and the county that it's located in, and I can do a free property search. And it'll tell me exactly who owns the property, what you paid for it, when you bought it. Why? Because that's public record. But no one does that. But you sent a guy $250,000. You sent a guy $350,000. You sent a guy $1 million. Why did they do that? The TV personality, the radio personality guy. The popular social media guy. See, that's who they were buying into. They didn't know the scammer behind the thing. But yet and still, that's where the money went, right? So you guys got to be careful out there on these grifts, these cons. And it's all over social media, man. It's all over social media. But why are we susceptible to that? Number one, we're susceptible to it because we have too much belief and faith in these social media guys and gals. That's number one. See, we put all of our faith in them and we get lazy, put our faith in them. We don't do any due diligence on what they're telling us. And next thing we know, we're investing in it because we're just investing because they said to invest. When really we should have been doing some due diligence. We should have looked up this guy who actually, but we don't. And you see it out there, man. I see it all the time where people are out there talking about they're going to do this, they're going to do that. Oh, we're going to fix your credit. There's nothing too big we can't remove. Guys, do you really believe that? Do you really believe our credit system is going to allow people to just do that? I tell you, man, you guys gotta stop looking for shortcuts. And I know that's not all of you guys, but some of you guys are out there looking for shortcuts. And you get yourself in the weeds and you can't get out the weeds. You lose your money. And the reason I know you lose it because then you'll email me or DM me and say, hey, this is what happened. So all I'm telling you guys is be careful out there. Don't look for shortcuts, right? Play the long game. Don't look for this short game stuff. You look for the short game, you open yourself up to scammers and people that will take advantage of you. Please don't play the short game, play the long game. Find you some investments that make sense for you and your wealth building strategy. If it's real estate, great. If it's investments in the stock market, great. You do not need some guy or gal to do that for you. You can do it for yourself. Now, there's nothing wrong with investing in real estate with a group of people. You just need to know who the group of people are. You just need to do your background. You need to do your research. If somebody is telling you they're a CFP, or they have they're an investment advisor, they're a financial advisor, get their full name, get their credentials, and go do your background on them to make sure they are who they say they are. Don't just take some guy on Instagram's word for it. But that's what we do. Or we see these guys on these big old gigantic YouTube platforms. And they bring all these little scammer guys on, and then they'll mix in some legitimate guys, and you don't know who to believe. They bring in these scammer guys, but they'll also bring in legit guys. The legit guys they'll bring in for free. The scammer guys pay them to come on their show. Hey, listen, man, I'll give you 10 grand. Give me an hour on your show. And that's when, guess what happens? That's when the scam starts. Because they pay these popular YouTube platforms or these popular Instagram platforms money to get access to their audience. And if you're part of that audience, guess what? You're not paying attention. You're paying attention to the scammer guy, but really you're saying he's been vetted. My popular YouTuber or my popular Instagrammer or my popular whatever has vetted this guy. He wouldn't have him on his show if he didn't vet him. So I don't need to do no vetting. And then next thing you know, you're scammed. You're out of 10 grand. You're out of 5 grand. You're out of 30 grand. Guys, it's happening. Be careful. Stop looking for shortcuts. Stop trying to play the short game. Put yourself in the long game. All you got to do, if you want to buy real estate and you want to do it yourself, go find a safe way to invest in real estate so that you don't have to manage the toilets and tenants. There are a lot of good funds out there. I'm getting ready to start one. The Prime Real Estate Fund is going to be a fund for investors to pool money together. And I'm telling you right now, don't trust me. Go out and do a background on me. Go do your research on who I am. You got my full name. This is not some mock-up name. This is my name. It's on my YouTube channel. It's on my Instagram page. Everything is public record. The houses that I've bought are public record. The houses that I currently own right now are public record. I don't have to lie to you guys. All I'm telling you is be careful out there. This world is about itself. People don't care anything about you. You need to care about yourself. You need to do your due diligence before you send anybody money. I keep telling y'all that. With the exception of RF Financial Consulting, where I do the one-on-one financial coaching, I've never asked anybody to send me anything. And even in the financial coaching, I don't promote that. I promote it on my YouTube channel. In the back of each video, I have a little bit of homemade commercial that I made in my garage. That's it. But I don't promote it on Instagram. I don't go on other people's shows. And y'all know something. Y'all don't see me on no podcasts. Y'all don't see me in any of that crap. And again, ain't nothing wrong with it. It's just not my thing. I'm not turning over my audience to you guys, and I don't even know y'all. I don't care how big your audience is, because see, that's the lure, right? Or they try to pay you. I'm like, nah, I don't need the $2,000. I don't need the $1,000. Nah, I'm not doing it. No, thank you. Appreciate you, but no, thank you. I'm not turning over my audience to you guys. I don't even know y'all. There's a reason you coming to me, though. Right? So I know that, but I stay away from that. And I want you guys to stay away from that. Stay away from it. Get you a regular plan together, guys. A regular game plan. And that game plan should include how much money can I invest? How long do I want to invest? What am I trying to accomplish by investing? And just play the long game. I'd much rather you take $100 a month, $500 a month, $1,000 a month, and thinking about putting it in an S&P 500 ETF and play the long game. The S&P 500 ETF that tracks the S&P 500 index. Play the long game. Do that for a number of years and you'll be fine. I did a live stream or a video yesterday where I titled it, How to Invest $1,000 and Never Work Again. And I systematically walked you guys through how to take $1,000 a month and get to your freedom. So if you're interested in that, go check that video out. It was from yesterday. Go on my YouTube channel and find that video. It's how to invest $1,000 and never work again. I spend an hour systematically walking you guys through how to take that $1,000. Now, if some of you say, I don't have $1,000, Richard, that's okay. Whatever amount of money you have, take that. The key is consistency. You got to consistently put the money in. That's the key. Consistency. You got to consistently put that money in over a period of time in order to build wealth. If you're patient enough and consistent enough and disciplined enough to do that, you're going to build wealth. Period. Stop trying to play the short game. In most cases, the short game is going to wind you up losing money. It will. Especially if you're following these guys on Instagram, if you're following these people on TikTok, if you're following these people on YouTube. I'm never going to ask you to send me anything to invest for you because I don't do that. Not personally, I don't. The Prime Real Estate Fund will. But again, all you got to do is go out and do your homework on me and vet me. That's all you got to do. And then if you don't feel comfortable with it, don't invest in the fund. And it's not going to make a difference to me, guys. See, I'm not doing the Prime Real Estate Fund to build wealth. I'm doing Prime Real Estate Fund because I think it'll be a cool way to be able to buy real estate with the people that I've learned to like and enjoy over the last 4 years. It's just a way for me to have some fun and give people the opportunity to invest with me because people are always wanting to do that. Now, if people decide once I create the fund that they don't want to invest, then no big deal. I keep doing what I'm doing. I just keep doing what I'm doing, right? I've already had several people say, Richard, don't even bother with this thing, man. Why are you even doing this? Just forget that. And I said to myself, guys, I can't let it go. This is something I want to do. I want to be able to invite people, potential investors, where they can go see these beautiful properties that we're going to buy with this fund and inspire them to build their wealth. Some of y'all will invest in this as a part of your portfolio to build your wealth. To me, that's worth it. It's worth it. Now, having said that, you still vet me. I encourage all of you guys to vet me. If you're listening to me on YouTube, vet me. If you're listening to me on Instagram, vet me. Do your homework. Go out and do a Google search. Even go deeper if you need to. Ain't nothing in my past, man, that's going to pop up. That's crazy, guys. I'm a conservative guy. I'm not one of these guys out there doing crazy stuff. That's just not my past. It could have been. I grew up in a pretty rough area. But, hey, man, at 13 years old, I decided I'm going to go the straight and narrow. I got in trouble at 13 years old. I got in trouble, serious trouble. And God blessed me and got me out of that trouble. And from that day on, I promised God, I said, God, if you get me out of this, I'm done. I'm not going to try to be I'm done. And he got me out of that trouble, man, at 13 years old. And guess what, guys? I never looked back. I've been on the straight and narrow ever since. Now, I'm not perfect, but I'm not one of these guys that are on here to lie to you and scam you out of money. If that was the process, guys, guess what? I could have been done that. Guys, I've been doing YouTube full time since 2020. If I was here to scam people, trust me, I would have did it already. I would have did it already, man. I did it already. But you can't find one person out there, not one YouTuber, not one Instagrammer, not one just regular follower or subscriber that can tell you Richard Fain took something from them and didn't deliver. That's not going to happen because I don't take money from people. Not like that. Oh, send me this and I'm going to invest it for you in my whatever. I'm going to teach you how to day trade. I don't do any of that because that's not my thing. I'm a long-term investor, old school investor. So guys, be careful out there. I'm going to wrap this thing up. One more thing I want to say about next week. Be prepared for next week. Be prepared, especially for November 1st. Be ready to watch the Fed chair at 2:30 p.m. Eastern Time give his comments about the state of our economy and the state of inflation and interest rates. Take 30 minutes out of your day, get on your laptop, get on your iPhone or your smartphone and catch that 30-minute conversation because it's going to be helpful to you. It'll summarize everything and kind of give you an idea of the direction of the Fed. And then later on in that week, hopefully on Friday, we'll get the jobs report. Pay attention to that jobs report. And the thing you want to pay attention to is, did the economy add more jobs in October than they added in September? And if it added more, that ain't good for inflation, in my opinion. That's just my opinion. You can come up with your own conclusion, but my conclusion is that's not good news if it did. And then the last thing is, I want to say it's going to be not next week, but the following week. You're going to probably get the CPI inflation report for October. And that's going to give us some idea of what inflation is doing. Is it going up? Is it coming down? So those are the three things in the front part of November I want you guys to pay attention to. Fed meeting, jobs report, CPI inflation report. Those three pieces of data are going to be important. Pay attention to them. I'll be talking about them and covering them as they happen, but I wanted to give you guys a good heads up 2-3 days ahead of time. So as people watch this little video, they got an idea of what's coming. Those things are important to our wealth building strategy. We need to know what's going on if we're going to build wealth effectively, and we can. But we got to pay attention. We got to be laser focused. We got to have a game plan. We got to stick to that game plan, and we got to keep scammers out of our game plan. And the way we keep scammers out of our game plan is don't think short term, right? Think long term. And if you do buy a course or do something like that, you vet that person before you send them your money. You better figure out who they are. You do that. Don't trust your YouTuber. Don't trust your favorite Instagrammer. Don't trust your favorite TikToker. Them guys are just getting paid. Them guys and gals are just getting paid. That's all they care about is getting paid. They don't care nothing about you. Because if they did, they would have vetted that crook before they introduced them to you. So you know they don't care about you because they didn't vet him. They just went for the money. They just went for the bag. So stop putting all your faith in these people on the social media platforms. Because I'm going to tell you right now, 99% of them are just after the bag. They don't care anything about you. All they care about is how much money can I make to give you access to these people. I don't care nothing about these people. Just give me my bag. And then boom, you got access to them. And then all of a sudden when crap hits the fan, oh, I don't know anything about that. I don't know that. I didn't do that. That wasn't me. I lost money too. That's the excuse that this DJ guy, this radio host guy, that's his excuse now. Oh, I don't know anything about that. It was just a promotion, and God, he owed me money too. I'm in the same boat. I should be suing him. Yeah, that's your bad. You done scam. All these people done got scammed because of you. That's alleged. That's not. I'm just telling you what I've seen. All these people done got scammed because of this guy. And y'all know who I'm talking about. Like I said, I'm not going to be throwing out names and all that stuff on my channel. But y'all know who I'm talking about. Because a lot of y'all that watch my stuff on YouTube and on Instagram, y'all follow this guy. And guess what? The pressure on him, though, because the Fed involved. And see, more so than the crook, they would love to take down a big old gigantic personality like that. See, they love that. That makes people's careers. So they're going to go after this guy with everything they got. If they can find a way to put his butt in jail, he going to jail. He going to jail if they can find a way to put him in there. I'm telling you, and they hot and heavy on him too. They done already raided the little studio, the little radio studio that he work at. They done raided that. They done already took electronics. So you know these people got the best forensic forensic teams in the world, boy, that's going to be looking at that stuff. And anything on there, guys, that incriminates him. Anything, one email, one text that proves he knew about this scoundrel stealing money from people, oh, goodness gracious, they're going to throw the book at him. And then guess what? His whole career is going to be ruined. All because of what? Money. All because of greed. And that's a shame. That's a shame that you build your career. You come from the mud. You come out of the mud, build up a career out of the mud, and you let a few dollars jeopardize your career and your family. Guys, it ain't worth it, man. Money is just a tool. It's not worth it. It's not worth screwing over people to make money. I keep telling y'all, people first, money second. You help enough people get what they want, you get what you want. Do not put money over people, please. And I believe, in my opinion, that's what this guy did. He put money over people. And that's a shame. But guess what? That's happening every day out there, guys, on these social media platforms. I keep telling y'all that. Stop listening to these people. Get your own strategy together. Play the long game. Stop trying to find shortcuts. Stop giving these people your money expecting something in return. They're not going to give you nothing in return. They're going to block you, not pay any attention to you. I mean, you know how bold you got to be to take $1 million from a guy and then just not return his calls? You got to be from the mud, boy. You got to be a straight street dude with no fears, no dreams, to take $1 million for somebody and not even worry about him coming at you. Boy, I don't want to deal with a guy like that or a gal like that, boy, because they ain't got no dreams. They got nothing to lose. I mean, how do you take that kind of money from people and then just walk around like you ain't done nothing wrong? Just ignore the, golly, man, that's bold. I don't want to be in business with people like that. I want to be in business with people that are honest and straightforward and feel bad when they do something wrong. I don't want to be in business with people that don't even feel bad when they do something wrong. It's like it didn't even happen. They don't even care. They just keep lying. They keep conniving. Jesus Christ. Well, all right, guys. Hey, I appreciate y'all hanging out with me a little bit on this Saturday morning. I'm going to go ahead and close this thing out. I appreciate y'all. Hit that thumbs up for me before y'all get out of here. Hit the thumbs up. I know we went way long today, right? I know we went way long today, but guess what? I think it was worth it. I think what I was trying to get across to you guys is just pay attention next week to what's going on with the Fed. That's important. Pay attention to what's going on with the Fed next week. Pay attention to what's going on with the jobs report. Pay attention to what's going on with the CPI inflation report. All of that data you're going to get in the first 15 days of November. All of it. You got to pay attention, guys. And you got to use that information to adjust your financial freedom plan. You got to use that information to adjust it. Now, I'm going to be breaking down some smaller videos as those reports come out. I don't think I'm going to do a live stream on them, but I'm going to do smaller edited videos for each one of those reports, each one of those that we just talked about. So look out for those videos next week and the weeks to come. Watch them, get a bit of understanding, but ultimately, don't just listen to me. Go out and do your own homework. Go out and do your own research. Come up with your own conclusion. We got to start thinking for ourselves. We can't let these people on social media just spoon feed us. We got to go out and do our own research. Again, you don't have to be an expert. You do need to know the basic stuff, right? It needs to make common sense. Common sense says I can't give a guy $1,000 and in 2 weeks he give me $2,000 back. Common sense is against that. Right? It's against that. Common sense is I can't send a guy 250 grand and I have not vetted the guy. I've not vetted the property that he says we're going to be in partnership on. And all I got to do is take 5 minutes to figure out if he owns that property. Common sense. But see, we throw common sense out the window when we let these These personalities intervene. We gotta stop throwing common sense out of the window. So that's where we're at, guys. Y'all have a wonderful weekend. Wonderful weekend. Enjoy yourself. But be ready to go on Monday for a good week. We're gonna have a good week, right? Let's have a good week. But have a good weekend and enjoy yourself. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm gonna catch you guys on the next video.